by me like it's nothing. Fuck you thinking. I saw you feeling me across the room. Now let me have you come here. Can we skip the games and the 3-day text? Oh baby, you have got nothing to fear. Do you fuck with me or am I losing it? Trying to make things clear. Let me take you to my place. Just leave the talking to me and open up, you'll see that I wanna take you back to my place. Just take a walk with me so everyone can see us. What if I told you that I knew I'd figure it out without a doubt? I say, so get those eyes on me from across the room. Or let me have you come here. Can we skip the games and the 3-day text? Oh baby, you have got nothing to fear. Fuck with me or am I losing it? Trying to make things clear. Neutron! Is she for real? I'm looking at you, walking right by me like it's nothing. Fuck you thinking. Let me take you to my place. Just leave the talking to me and open up, you'll see that I wanna take you back to my place. Just take a walk with me so everyone can see us. Let me take trouble finding my past in places I've known to call home. And even if I could recover, I still wouldn't have a reason to stay here. No, I would keep running from who I am now, desperately looking for someone to heal me. Please make yourself appear from the mist. I know I can see you now, I can't refuse. Please make your way out of the dark now. Make me believe that I still have reason to stay here. I'm lost without you. I'll move every mountain here for you. Let it go, just let it go. I want us to go where we last held on. I'll fall without you, right to the ground beneath the grass I'll lay. My bones will shed the tears I left, leaving the memory we once shared. I'll be the one who says sorry for the life I gave you then. I'll come out the dark now, make me believe that I still have a reason to stay. I'm lost without you. I'll move every mountain here for you. Let it go, just let it go. I want us to go where we last held on. I'm lost without you. I'll move every mountain here for you. Let it go, just let it go. I want us to go where we last held on.
Yes. What is good, team? Welcome back, everybody, to the channel. Please do me a favor, hit that like button, subscribe to the channel, do everything necessary to get this thing to live long, thrive, and survive. Everybody, thank you so much for coming on by. Let me see if you're here and awake with me. Throw those A's in the chat right away. Let me see them stream through the chat right now, man. Throw those A's in the chat right now, team. Let me know that you're alive. What is good, everybody? What is good? Here to throw at you another FNGR thread of analysis, man. Let me go ahead and approach the bench here and get you full HD. What is good, team? What is good? Let me just go ahead and turn down myself here. My monitor, right, is going a bit loud, a bit intense. Man, am I ever so excited to be here again with you guys. Jeez, man. So what's up, everybody? Did you feel that bump to the upside or what? We absolutely got a little bit of a shoot to the upside, I must say. And I still have something to share with you about it. You already know that I have something to share with you about that very fact. Oh man, what is up, Chop? Good to see you here, buddy. Man, guys, thank you so much, everybody, for coming out. Make sure to spread the word. Let's get the room full. Let's make sure that everybody is able to come in today and get ourselves another thread, right? Of course, you guys, I understand that we've been a little bit out of the loop here, right? Trying to get lives together and trying to get the little guy to be cool at school, But tell me, team, who is holding FNGR in the chat right now? Throw those A's if you're holding FNGR. Please let me know that you are in it or not. And or if you're looking to enter some kind of position on it. Are we looking for risk on or are we looking for risk off, right, guys? All right, so just so that you guys know, I'm actually still holding my FNGR position as all of you guys, right? and that is in LITE. You're gonna find out once again, right? For those of you who haven't actually seen what happened here, the last thread of analysis, we're of course gonna share that with you here today, right, guys? Let me get, yeah, I'm trying to turn on my monitor lights here, and I just want to make sure that you guys see me. But there we go. Okay, you know, I'm a little embarrassed, man. I'm a little embarrassed. I want you guys to be able to see me here in full HD. What's up, buddy? Yeah, I got my little boy right next to me, guys, like always, right? He's over here on his tablet watching his thing. Remember, guys, that we're trying to just get the room full over here so we can get the analysis going for FNGR. Hey, by the way, I don't know if any of you have heard of this just yet, but apparently there is some type of movement happening internally of that one ticker created CRTD. Does anyone know anything about that? And is it also, I mean, is it true? Somebody recently told me about it, and I'm like, what? Are they really trying to do something? Yes, absolutely. The XRP ETFs are going live. Oh my goodness, man. There's going to be some pumps to the upside everywhere, right? But so far, guys, so good. I think that I'm gonna cover here at some point, you know, after we start. Yeah, Vince. No problem, buddy. No problem. I got you, dude. It's okay. I understand. I'm just trying to get the room full, guys. Let's go ahead and bring our relatives, our families, our grandmas and grandpas, whatever, whomever, right? I'm sure that once the voice came on, he must have been like, what the heck is going on, right? Jen, what is good? Yeah. Do you guys remember? Bro, Chili, it's only a matter of time, bro. Don't even trip. Come on, bro. Come on, man. Not so loud, says my little guy. But I'm really excited to be here with the team. But yeah, guys, you know, guys, I know that there's a little bit of doubt happening all the time, right? Right when we're at this place here, I'm going to go ahead and highlight to you the supports that we're currently under. They are powerful supports. They are areas that we've exploded shorts from in the past. But I got to say that there's always danger for a downside, right? Of course, these inflection points, these major lows could be those areas that are the most profitable for entries, right? But they could also be the most dangerous for entries too. Well, guys, I can see that, you know, even the small caps are starting to, wait. I think even the meme stocks, so the memes are also starting to kind of pop off here, right? Everything is starting to get a little bit of a weird correlation against the broader markets. You know, the broader markets are just creating these new highs and new highs and new highs. So I'm wondering here if that's also energy that we're going to feed from the broader market straight into your small caps and micro caps, right? Which would be FNGR and other things, which is why I'm also trying to bring up that ticker created. But I'm not sure if you guys remember that from a while ago, guys. I think Created Inc., CTRD, and GTII at one point were connected to each other to fighting for the CRTD has earnings on the 12th of November 25th. What's up, Nez? Good to see you, buddy. Thank you so much for that info. It is in the chat right there, guys. So, okay, fine. I'm just trying to see what's going on with that ticker because internally there could be some good stuff ahead. And if you guys know anything about it, like the way that Niz just shared with me, please don't be afraid to share, guys, because there could be some poppage if that company comes out, with some kind of some kind of news or whatever. But yeah, guys, as you come in, please do me the strongest favor. Hit that like button, guys. Subscribe to the channel. This helps the algorithm, choose the Arca Bulls team for discovery, right? For more exposure. And that'd be great if we can get some more people to understand how this perspective is observed using behavioral anomalies, using statistics. We're using physics here, guys. So whatever it is that we can use to, for an advantage on the chart, guys. Probability-based trading is a very strong thing, and it's something that's absolutely observed within your institutions as well, right? Something like Citadel Securities, right? My goodness. And yeah, that was interesting. You know, one of the star traders here, Jen, actually pointed out a correlation between FNGR and the VIX. And that was actually pretty curious to see, as the VIX is usually inverse the market. And today the VIX was actually moving with the market as this 2-day time frame kind of went up. But yeah, I was kind of observing that after you mentioned it. I was like, whoa. There absolutely could be this correlation here. So, you know, we're talking about major downside here, guys. So if that really is at the points of some type of major support being found, I guess we may have found it exactly with your XRP asset. I'm saying XRP, the FNGR asset. I was looking at the XRP right next to it. So yeah, guys, it's looking like the room is starting to get pretty full right now. Let's go ahead and get started with our thread of analysis here and understand or actually, you know, chart out the potentials or mark off the potentials for price action coming into the next days, as we did get a very expected nice bounce from this support bound as we speak. Bless you, buddy. Bless you. Let me get a little bit of a wipe here for my little boy. I'm not even gonna mute. I'm just here with him, guys. Come here, buddy. You okay? Your nose okay? Can you see it? Say, I'm good. Okay, but oh yeah, I got it. Okay. Good job. That's my little guy right next to me, guys. He just needed a little wiping. He's over here hanging out with the team before we get started with our analysis here on FNGR. Now, Jen, can I ask you, have you found any correlation between FNGR and an index? Because, I mean, you know, your small caps are generally under the IWM. And if there is, I mean, this could be tech as well, right? Yeah, and they are barcoding, but I believe there's something going on with CRTD internally. As you know, I've been kind of keeping up with it. A lot of people got trapped in that, just like they did in you know, things like GTII. I tried my best to put out the most effective analysis on GTII, especially after it dropped all the way to, I was thinking it was going to drop to 37 cents from, you know, well, to be fair, I was saying like $1 from $6, $5 or something. A lot of people didn't like that I was saying that, of course, but as promised, guys, you guys know me. You guys already know what I do here. I'm not going to tell you that something's going to go up when it's not going up. I don't care. I make mistakes. Sure, I'm not a perfect trader, but if I see something in the chart and if I see correlation to something that may be a good signal, then let's go. You know, there was a probability of a run that could have been around 3,500% on GTII, and I was expecting a 37-cent bottom, but it actually jumped from 47 cents. And over the span of maybe a week or, I don't know, 2 weeks or something, we ended up getting around a 600% jump, something along the lines of $6 or from 47 cents all the way to $3, you know, and the probability base was reading a lot higher than that. You know, from there, I just couldn't really do anything else. You know what I mean, guys? But, At least, I got many emails saying, Arca, you just saved my marriage. You saved this, you know, whatever, guys. I was just really happy to provide analysis that we can use and we can, you know, help the team out. That's really all that matters, man. And Obamacare, what's up, buddy? Let's see, like BlackBerry and Nokia. What are they doing, by the way? If I can have you guys share in the chat real quick, what's the deal here with those two old school companies? Are they about to go into the phone business again? No, right? No, or are they just investors of other larger phone companies and stuff like Samsung or whatever? They have stake in them, something like that. But Nokia, bro. I remember I had you guys remember that blue phone, the Nokia Brick? Right, it was like a blue phone from AT&T that came out in 2001 or 2000, maybe 1999. But that's what I rocked in my 9th grade or 10th grade year, right, in a sophomore year high school. I was a sophomore 2001. I graduated high school 2003, right? So that JP, I had that flip phone too, man. I had the Razor one, and you know, all those. But guys, I see the room still getting full here. I love it. This is awesome. We're going to be able to have everybody understand the movement here of FNGR. This is a very good move that we got today from that bottom side. So if you do have any friends, anybody that really wants to see the analysis here for FNGR, go ahead and invite them now, as we're going to get started here any second and get this thread out of the way, guys. Like I said before, I will touch a little bit on that ticker for CRTD, but that may be towards the end or in the middle somewhere, guys. But please go ahead as you come in, guys, and hit that like button. It really does help me out. I promise you that. I'm not fluffing on that, right? It helps the algorithm, kind of push the Arca Bulls team into further discovery, browse features. It'll start showing up in these random people's feed, and that's exactly what we need, guys, to really push the channel forward. Okay, guys, but if you are alive, one more time before we reveal ourselves over here, throw those A's in the chat so we can get the energy up and running in the room, guys. Let's see what's up. Make sure to share those A's in the chat for me, right, guys? Let's get it moving. Where's the analysis, Arca? Get to work, sir. Get to work right away. We're going to get serious here, guys. We're going to turn off the tunes, and we're going to start observing the higher probability moves for the FNGR asset. Throw those A's in the chat, guys. Please do me that strong favor, as it is kind of like a cheer for your boy here to make sure that we can get some proper analysis underway. Oh, yeah. Thanks, guys. Thank you, everybody, for showing up today. Thank you for coming on by. I really appreciate your support, your ongoing support, and your undying love. So, yeah, man, look at that, guys. Look at that. I really love that. Thank you, guys, so much. Really appreciate you. And yeah, so why not get this thing on the road? Let's get a sip of this water here and let's get it started. Thank you guys. Niz, buddy, David, Phil, good to see everybody in here today. XRP, New Generation, what's up, buddy? Good to see you there. A lot of familiar names in the chat, right? What's up, Michael? Good to see you there, my brother. Very good to see you. And of course, Lioness, that's my girl over there doing mad work. Thank you so much, Lioness. Really appreciate you. Oh, man, I love it. Obamacare, good to see you there, too. Panda, I see you there, too, buddy. Doc, what's up, man? Guys, thank you all. Thank you, Breeze. Thank you for coming on by. I know that I'm missing a few of you, but thank you, team. Thank you for coming on by. Let's get this thing rolling here. Let me get that sip of water real fast, or else I'm going to die from thirst. My son said not to say that. He said not to say that. Carnegie's, what's up, buddy? Good to see you there. Don't mind me, I'm just drinking a little bit of water here. We're going to show ourselves on the camera right now. Almost done, guys, almost done. Oh my goodness, I'm going to chug water so I don't have to drink again. A little more sip, one more sip, hold on. All right, buddy. Yeah, go sit over there. Get your blanket. Sit down, right? Daddy's just going to talk to the team here for FNGR, and everything's going to be good. Thank you, guys. Thank you, guys, for coming out. Just putting my son here behind me. He just wants to lay down on his little couch. I got a whole setup for him back here so that he can feel comfortable. You know what I mean? Nothing much. Carnegie's nothing much, brother. Nothing much. I'm just trying to make sure that I can get some proper analysis here for the team. And yeah, my goodness, BlackBerry looking like it has this gigantic cup and handle here on a 6-hour time frame. Look at that thing right there. Sorry, guys, if I'm blinding you, but absolutely massive cup and handle on there. Very cool. And guys, please don't try to come in on Discord. I'm not in the public side of Discord, guys. I'm actually in an analyst meetup, and I really am here in YouTube live, right? As I want to get as many people as I can into the YouTube platform to so we can get that the algorithm to face us. You got it, buddy? You want to use your blanket? Here, honey. Stretch your legs. You like it? Yeah? Okay, here. Let me put this around you. Up. Put your tablet up. There you go, buddy. There you go. Yeah, team. Of course, you know what? 6-year-old here. You just turned 6 years old, guys. My son's birthday is October 21st. Mine's is October 19th. Perfect. He's ready to go. Let's get this start. Let's get the camera started and let's display ourselves and get this thing rolling and rolling, guys. All right. All right. All right. Where is... Here you go, team. All right, all right, all right. Here I am, guys, displaying myself. Thank you, everybody, for coming on out. Let's go ahead and get this thing started. I want to make sure that I can express my gestures to you and all that good stuff, right? So also, I don't like that my head's getting bit by that thing on the top, the little light thing right up there. But FNGR, guys, please remember that the support that we're currently under, right, has a gigantic, I mean, absolutely abnormally high rate for rejection. This is why we can call it trendline rejection, regression rejection, right? This is it right here. I know that there's a mess of, there's a mess of targets over here, so we're going to get rid of some of those as I'm just trying to project to you the areas of support and entry before the continuation to the upside. So I'm just going to go ahead and show you guys that this is the first time I've actually seen this chart since I last came on to express my thoughts on it, right? Okay, so just to fill everybody in, we were talking about entry conditions between 151 and 153. So we ended up getting that 151 touch just yesterday. So let's see, let's just make sure that it is, right? I know a lot of you are gonna want receipts, right? Receipts. So let's go ahead and just say yesterday during the day, we're going to take a quick little screenshot of this. It's not frozen, right? And what I want you to observe is when I put this up here is the low, right? On L. This is what it is. So the open, high, low, and close. This is what we had here for entry, right? So remember yesterday wasn't there when I put those targets there days and days and days ago, right? Last week, I think it was. So here it is, guys. The entry conditions were 151. Should we face any liquidity bottoms, then we would wick down. This was the idea, right? That's why they're different in colors. Primary entries 151 to 153, 150 to 149 were your liquidity bottoms. Okay, so we got the 151 entry, and from this area, of course, guys, we have now moved to the upside. I want to just be completely honest and tell you that, yes, from last week, right, and I honestly don't think, let me see, this was October 20th, right? So we're now sitting in October 28th on a Monday. So these targets, when I came on live with you guys, these were just put there as in we're going to likely reach it again before continuing to the upside. Okay, so we got that. We had an inverse head and shoulders here that met the targets that we wanted, right? But more importantly, we've already reached some of the highest targets that we wanted. So for example, this just around 2 days ago or 3 trading days ago, we reached the target of the expected 172, but it reached 174, which we already kind of had. Okay. This is just a validation, guys. That's all it is. Remember the fractal. I want to display the fractal to you so that you can remember exactly where it is that we're bouncing from, right? This here. So we have a lot of correlation between this instance here as well as this instance here. Right, you have those 3 waves, right? You have the 1, 2, and 3 wave. You have that 1, 2, and 3 wave here as well, and then you have that burst. Here's that burst, and you come down. So, what I think is going on is that this was, if we are following direct fractal analysis, right? That's the if factor here. I don't only follow fractals. So this would mean that we would create a higher low by kind of bursting to the upside and kind of coming back down towards this zone here, which I believe could have been this here. So we got that burst to the upside from the inverse head and shoulders, right? And we came back down and now we're moving up, just like we did here. Pop up, came back down, now we're moving up. The fractals are never going to be perfect, right? There is always There's always going to be variance. John Rambo, my dude, I love that you carry that name around. I hope you, man, there is not a lot of people who know that history, brother. John Rambo saying, what up, Arca? Hope you're good, brother. Thanks for the live FNGRs. FNG, let's see, fingers crossed. Nice. Very well said, sir. But yes, Doc Henry, what's up, buddy? Smash that like button, man. Smash it, guys. Thank you so much. But yeah, John Rambo, of course, guys. I still watch that guy. I still watch that guy's the videos, man. What an incredible trader. That's one for you, Jen. I'm going to pass you over some videos so you can see John Rambo. But very, very good. First Blood boy. What's up, Philip? Good to see you there. What is FNGR? Guys, why don't I go ahead and have you answer that question so I don't spend so much time in describing what FNGR is and what it's capable of and what it's doing. So go ahead and make sure to, team, make sure to, express some knowledge here to Fact Finder and express to them what the FNGR asset is. What is it? Aside from the fact that it has millions and millions and millions of participants in it and lots of criminal activity has happened within it as well, right? It's been subject to some silly things out there. But yeah, guys, so that's the primary basis, right? Remember here, your fractal 1, this is your fractal 2, where we've experienced massive breaks from, but specifically this fractal or this, this part of the fractal, which is this here, right? We could be experiencing that reaccumulation phase just like it's coming down in here before we experience that. So of course, nothing is perfect, and it doesn't mean that it's going to happen. But what I will say is that we are in the process of creating even a higher low structure here, or from here, or from here. If that really is the case, I still am a little doubtful, only because it's still creating a very balanced regression here, right? It's still kind of on the downside. But that's the important thing, guys. That's the important thing. The fact that we've created massive bounces from this regression here, specifically this one, right? From this very bottom side, if you match that trend line all the way over here, you can see that we also got a very similar iteration here, man. Look at this iteration. Look at this iteration, right? You have that sharp decline, right? You have that upside. You have the upside just like this, come back down, reaccumulate, potential upside continuation. So from this bounce, guys, this was 130. That was 130, and this came up. I mean, it pulled back from the areas of 452. It pulled back from 708 and eventually reaching $8 in price. My goodness. That was a gigantic bounce from that area there, and it just so happens to be part or very similar to the fractals that we're experiencing here. So that tells you something, guys. That tells you that this is the psychology behind FNGR. This could be a way that FNGR starts to accumulate, right? It starts to prep itself for an upside. So now that we're getting this pop, because we were kind of expecting it anyway, right? Because this is a historic low. This is your pop from just today. Moving from a low of 152 all the way up to 170 in just one day here, that's great. That makes that, I mean, the last time we did that, we kind of just capitulated and came right back down, right? Whatever that is, we're going to figure it out. Let's see if we have any idea or why that happened, or see if we can continue to the upside from here. Here is the, yeah, honey. Yeah, I hear you, buddy. I hear you. I love you so much. You hear him, guys? That's my 6-year-old boy over there just talking his, he's talking his little language. But yeah, let's put this on a 12-hour time frame, guys, just so you can see. This is your historic bottom, right? I know that the channel still has a little bit of whatever. It's a little messy here because of the immediate short-term analysis. So this is the area, guys, where we've created massive bounces from. I also have many videos, guys, from, I mean, I have videos from down here. I have videos from down here back, you know, in like January. Just, we've had it, guys. We've had some pretty nice times, exploring the potential bounce areas for FNGR. So now that we know where we are, now that we got this fractal out of the way, is this actually the time to go? Well, let's take a look at our analysis here, guys, because back at this iteration, which was your guys, it was Friday. Does anyone know what closures? Here's a real question, and I don't think many people are going to be able to answer this, but the closing basis of time frames, like for example, when your day closes, right? That's your intraday candle, meaning that you trade. You're like 9:30 to 4 p.m. Eastern time of your session, right? That's your trading day. That's your day. It closes. So that's an important thing to know. What time frames close? So if your day closes, what could you look at? And this may be something of a surprise to you, but what can you observe to see what's correlated or what's rhyming or what's in concert alongside the daily? Well, naturally speaking, everything under the daily, right? So your 12-hour, your 8-hour, all of those close confluently in concert together to lead up to the daily. But what happens beyond that? Do we have closures? Do we have closures of like your bi-daily, or do we have a closure of a weekly alongside your daily in 2 days? So that's what I mean. It is important to know when you are in trading. Always. Time is a critical thing in trading. You guys experience this even in your companies, like for who you work for, right? The month end. So we have to close the books for the month. What about the quarterly end, right? We have to close the quarter. All those things are very much true to the trading conditions too, right? You close a quarter, you rebalance, and then there is expansion. So maybe there are risk assets that we want to not be risk on for. So institutions will rebalance. They will close out positions, right? Bring price of their whatever earnings they are, right? Bring it down to a certain level. And then when the month starts again, reposition at that low. So those things happen all the time. So not only did we get here just about 24 days ago, we got the 10-month closing basis, right? Not only was that the fact, but we also ended up getting many other months prior to that too. And this Friday specifically, guys, let me explain this to you. This Friday, we got, what was it? The 1 week, right? The 2 week closure. We got a 3 week closure, a 6 week closure, and a 7 week closing candle all together. So if we know that your institutions risk off at the ends of some of these iterations, then you know that we also participate in such acts as well. You hear it all the time. It's called follow the smart money, right? So you follow that smart money. And you know when people pull out, so you just pull out because they pulled out. It's everywhere. It's a general strategy. So this is why you get some of that contraction at month end, at week's end, bi-weeklies, right? That's why you get that kind of contraction in price and decompression. Because there's an average time for an average trader to risk off. It just so happens that in equities, your daily time frame starts to decompress at 1 hour prior to the close, hence power hour. Your 2-day time frame is roughly 2 hours prior to the close. So if it's going up, it'll decompress with high probability. Doesn't always happen, but it will compress, right? Decompress to its 50% and then start to continue to validate your equal reaction. So that would be Newton's third law of equal forces, right? It'll just decompress to a 50%. We're using mathematics here to understand the probabilities of whatever. So statistics, we can use some physics, we can use whatever you want as an advantage. It doesn't mean it's perfect. It just means that it has a high probability. So when you start reaching your weekly, then you're looking at 6.2 hours prior to the close of closing the weekly candle. 2 weeks would be around 13 hours, right? So imagine that you knew these rules and you knew exactly when a lot of these factors correlate and rhyme with each other. because there are times, guys, that we faced like we're closing the 1 month, 2 month, 3 month, 6 month, and 9 month today. It's insane. And all of that creates a dynamic all over the place in price, which we are able to kind of analyze, break down by smaller time frames closing confluently to each other too. These are the things that I teach my master students, guys. These are, I mean, I'm talking about master students that are already into at least a half a year with me, right? But I mean, if you guys want to do that, there's one, guys. It's $100 for 9 weeks with me. That's your first mentorship. Get it in the description below, starting soon. Anyway, guys, so let's start seeing this. Because just yesterday, we opened up the 1 week, 2 week, 3 week, 6 week, and 7 week candles. And hence the downside as we were closing your weeks, right? So it decompressed on the average time to the 50% of all these weeks, right? Roughly 50%. It could have been like 38 to 40%, right? It came back down to test the low, but didn't make all the way to the low. So that means now that we're opening up a new iteration of your 1 week, 2 week, 3 week, 6 week, and 7. This is your statistic here. There is a 60 to 70% chance that you'll get a 30 to 50% prior bar retrace. So if you're looking at a 7 week candle, this would be it right here. That's your prior bar. We just opened up the new one, right? We opened it up here. We got a downside, right, to make sure that we can test validations or validate your supports, which is called your peekaboo. I'm not even joking, right? Then we make the upside continuation based on the probabilities of retracing your candles 50%, 30 to 50. So if we respect the dynamics of a 7 week candle, well, price action would say that we're going towards 179. Now, that's not it, though. That's not entirely the whole story. The thing for us to understand is that all of this upside from 155 all the way to 180, what does that move do to all the immediate short-term statistics? So like the hourly, what does that do to that? What is all that? What does it do to your more immediate short term? Right? That's what I'm talking about. So you're going to start cascading time. It's a ripple. Right? So your time from the time frames from your immediate short term, as they can increase with the 7 week doing its own statistic, all of those immediate short terms are rushing and rushing and pushing and pushing. To what point will they push? Will they push again all the way worth 7 weeks of upside? So then we'll get twice the move. So if we get twice the move, that would literally be a full 7 week candle, 220. Those are the factors of cascading time. Those are the factors of probabilities, and those are the factors of physics. How far can the volatility against momentum push on that thrust? That's why I'm here. Because I'm here to figure out those probabilities. We do it to ourselves. We as consumers, we as traders do it to ourselves without even thinking. We fulfill the notion just because it's what it is. Right? That's what geometrics also do for us. Your Fibonacci retracement tool. That's another way of observing your potential future price. Okay. Good stuff. Guys, listen. No, I'm not going to judge anybody in here. I'm not going to judge nothing. Okay, nothing. I am holding a position right here, and I usually don't like to do that when I'm observing analysis on this, because it makes me a little biased. But I promise you that if I see a downside on this, I'm gonna state it out loud. I don't care who sees. I do not care who sees. I will call the downside if it's there. But right now, I don't see it. Okay, I'm just going to be very honest with you. But here's what I was going to say. I'm not going to judge anyone. I'm not going to judge anyone whatsoever. But can I get an A in the chat if you understood what I just said about price action and its time confluence? Please throw those A's in the chat. I mean, in fact, you don't even have to look at me. I'm not going to look at you either, right? So guys, throw them in there. And let me get this sip of water. Let me know that you understand exactly what I'm saying here with time. Please share those A's in the chat right now, guys. Go, go, go. Good stuff, guys. Now, sorry, I had a question. Just a little bit earlier. I think it was you. Was it Morty? What's up, buddy? So, Archimedes doing what he does best. Love you, buddy. Let's see. Thanks, Arca. Hoping for good news. We'll listen later. Morty was asking Arca, what would a special dividend, as Ham mentions, do to the stock? Oh my goodness, guys. Well, I need to know the dynamics of the special dividend in the first place. If it dilutes the stock, I hope it doesn't, which I really doubt. Well, that can be, not so, not so good. But if it is outside, if the dividend really is outside of all the dynamics of adding to the supply, and it really is a traditional dividend, but with its special character, whatever that is, I wonder if it has anything to do with crypto allocation. Because everyone is doing that, right? So man, that would be actually, guys, let me know in the chat. Let me know in the chat, guys, if this thing went and did some kind of Ethereum allocation, would you guys think that was a bullish thing or a bearish thing? Let me know. What do you guys think? Just put bullish or bearish. So XRP, let's see. Dividend has history of killing the stock. Yeah, see, that's what I mean. It could be. I need to know the details of that dividend in order for me to kind of just express my opinion. There's no telling just yes or no on that. You know what I mean? But yeah, it does have a factor, which, I mean, here's another thing, guys. Here's another thing. We haven't seen, as close as this thing has reached under $1, FNGR still hasn't. They haven't reversed. They haven't RS'd, or they haven't reverse split. And that's a good thing. So that may tell you something. They're not using any pump, kind of like AMC, right? AMC gets this massive pump to the upside, and then you get the offering, and then the asset tends to fail and it'll drop, right? It's because leadership comes in and swipes all that, they swipe all that investor money, and they use it, I'm like putting my hands up with a quote. They use it for expansion of sorts. And but where? Of course, I'm not doing my studies, and there very well could be something to oppose what I'm saying, but FNGR really hasn't done that. And that is a pretty good statement. And I hope that, I'm going to knock on wood right now, guys. I am. I'm going to throw salt, over the shoulder, because I don't want there to be some type of misunderstanding with that, guys. Just, we have to be careful, okay? Know the details, study other similar assets when it comes to special dividends. Look at the details of the special dividend and study why people didn't like it or liked it. It doesn't have to be negative to the asset, right? Just like an RS doesn't have to be negative for the asset. But it generally is observed as such. So if there are iterations, if there are, instances to where we didn't face such a negative thing based on your special dividends, then study the stock. See if it has a similar market capitalization. See if you can find it even within the same sector. And those would be the areas where you can study or backtest. So, but remember, guys, that I tend to look at things a little differently. Sure, I take those things into consideration always. Your fundamental catalyst is a fundamental catalyst. In fact, I won't introduce to you an A+ trade or an A+ execution for a massive upside without without the catalyst, you know? So as far as FNGR's upside, I would like to see a jump to, I mean, if you guys, okay, throw those A's in the chat if you want to see exactly what I mean for a top side. Do you guys really want to know what upside target I'm looking at? Because what I'm doing here is giving you forecasts for 3 days ahead, 1 week ahead. And so far they've been good. But do you want to know my forecast for like maybe a month ahead or 2 months? Throw the A's in the chat if you would like for me to study that instead of studying the immediate short term. Or I can do a little bit of both, but I can focus on your larger time. And I will express some massive discretion to this, okay? Okay. All right. Okay, XRP. Nice, buddy. Long term, because you guys are holding long term, right? Ralph, what's up, buddy? Okay, fine. Then yeah, then we'll do that. David, you too, buddy? Curtis, you think I should do the yeah, okay. Elegantly wasted saying long term as well. So yeah, guys, I mean, if I'm getting the majority, David, thank you, buddy. Like a bi-monthly study? Okay, fine. I'll look at that as well. Run Forest saying here, okay. Run Forest also wants me to do the long term. Fine. Then I like it, guys. Abe, you too? Let's kill it. Let me get this thing restarted here and let's go. I'll give you that. I'll give you that. Because you guys already know, we always look at this shorter term time frame stuff. Daryl saying, do it. Okay. Let's get it done. Okay. So if we're talking about long term, then number one, this is the area to observe. I know a lot of people observe a regression on this, right? In fact, I'm not going to disturb this chart. I want to maybe use another one that doesn't have, let's see. Yeah, I want to make sure that it doesn't have anything present so that I can study from there for you. Let me see your by month. Okay. I'm going to get rid of a couple things here. Perfect. Okay, so what I mean by regression is that this would be the bottom. And the bottom is usually an area where people like to buy, right? So let's look at your typical analysis, right? People observe things like this. People observe things like this all the time. It doesn't mean it's valid. It doesn't mean it's invalid. It just means that you observe things like this. Just like we are programmed to kind of look for faces in the clouds, or not faces, just shapes in the cloud, right? We'll correlate a turtle, and we can see it, or faces on cars from their front end. The psychology is very strong in order for us to understand where the price can go to. Now, I see many, many more people kind of observing what I showed here. I don't know. Guys, you tell me, was it a year and a half, 2 years ago? I was already showing you this this triangle here. I was already kind of displaying to you guys the probabilities of regression like this. This was something that I pointed out a long time ago. And it's starting to surface a lot on social media. And I'm like, oh, man. Yeah, it's sort of there, you know, sure. It could be, you know, but another perspective to this would be another type of bullish one for sure. So I'm here to change the game a little bit on everyone. So, oh man, 2 weeks, buddy. You have the November 21st ones, I think. Is that what it is? It's okay. It's okay. Things happen, brother. Okay, so check this out. this is something that I want to show you too. At the closing valuation of this red bar right here, that closing valuation has a gigantic amount of correlation to many, many candles. All here, right there, and all of these in the past too, even back here. So this is technically also an ascending triangle. And this is your top side, which means that you have it's forming on a downside, guys. That's bullish. So if you have the downside first and then convergence starts, that's a reversal signal. Now I can give you something a little more steady. Why would I say that? Why does it have to be more or less steady? Well, it's because the regression on this one here, the pennant, the bull pennant like this, your bull pennants tend to break out, statistically speaking, when they're 60 to 65 to 75% to the apex of the triangle. This is reaching kind of like an 80% already and still not really doing it. And we're closing this bi-monthly time frame in 2 days and 22 hours. So that brings me to, I don't know if this is going to be validated here just yet. I think that we got to start looking outside of the box. So if I do this and now show you that there is correlation from this starting point, even in the past and into the future, seeing that these are they're just variances of price. They don't mean too much. They just rhyme with other things historically, and that's it. But they have no real meaning. The real meaning obviously sits in these areas here. Okay, so if that's the case, then I can definitely show you here that this regression can lead for a bigger upside. Now, it doesn't have to be that it has to reach over here all the way to May of 2027, right? It doesn't have to be that, because there is also another type of regression happening within this regression here. And if that really is something that I'm observing here, guys, if it really is like that, then there are two different types of traders trading the macro time frame here, and we're going to figure it out now. Let's see. Remember, I'm giving you a 2-month, I'm giving you, targets to the upside beyond just now. I want to see where it's going overall before I use, I want to use it overall before I use volatility. Okay, I'm just going to do it like this for now, and I'm going to use a regressive channel just like this to see if I have any correlating supports or resistances on the upside. I kind of sort of do. I sort of do already. Hang on just a moment. I'm going to see if I can really nail it. And if I could, bless you, buddy. You okay? Guys, I think it's here, but my little boy needs tissue. Hold on just a sec. Let me just put this here. Just about like this, right? I got to get that. I got to get my little guy tissue, guys. Hold on. I'm so sorry, team. Hold on just a sec. He's over there sneezing like crazy. Just a moment, team. You okay, buddy?
Neutron to beat.
Okay, team. Okay, I am officially back. Thank you so much, guys. You know, it just gets a little tough sometimes with the little guy. But he is okay now, and I got his nose all dried up, and he's got some snacks, so he's going to chill out in his couch. Okay, so yeah, what I was saying here, guys, is that there is a present regression within the more macro regression down here that can display two different targets to the downside. Okay. Remember, now this is historic. The 12-hour regression that we were observing just prior to this was based on this here. Let me display it to you. This here, right? We see so many of these supports. But what's happening here is that I am also including this. Right? I am including this all the way back here to get us a regression all the way to where we are now. And I will show you this in this fashion. Let's continue. So now you're observing, guys, that there is a larger correlation here. Specifically starting from maybe this point right up here to this downside, and we get this massive connection there. which is what we were just kind of displaying here. Now, I want to show you this target as well. The area of about 101. Yeah, you know, from the 13th of March, 2023. Let's see where that is. 13th of March would have been around this low here. Yeah. That's where I'm kind of connecting things into. Let me show you. This here, right into this, is also connecting towards these top sides in here. So let me see if we can go ahead and show you that. The very top side. So let's go ahead and see if we can connect that as well. That top side of the price action would be at the 101 of the March candle low. So let's make sure that we can extend this upward just like that, right? And now we have the after hours resistances up here because we just can't see them right now because these are anything after the daily. You are not going to see your after hours price. All you're going to see is just your intraday price. Intraday meaning that your regular trading hours. That's your 9 to 4 p.m. Eastern time. So this in reality is your macro support, right? So this is introducing to us now a gigantic area of probabilities. So what I'm saying by probabilities is that now you can see that I have shortened the triangle by time as well. Remember that with this regression down here, your triangle really ends at this point right here. I'm going to make sure that this is very much highlighted like that. This is where your triangle ends, right? But should we use the top regression? Well, that shows us a different dynamic. That tells us that the regression actually ends more along the lines of this here. So it shortens the triangle. Look at this. I mean, look at the dates down here, right? It's starting here. That's your Wednesday, January 1st, 3031. And it continues to July, September, November 2032, all the way to July 2032. So like 14 months, 13 months, whatever that is, even 15 months, we shortened it by that much. So now that increases the probabilities of an even earlier breakout. If this is truly the starting of your triangle here, this is your iteration 0. You don't count this as a test to the upside. You test this one right up here, right? Let's go ahead and get this pointed. This is test 1. This is test 2. And guess what? These ascending triangles tend to break out at test 3. So now we have another probability here based on the formation theory. So psychology already knows that this is going to break out from this target here. And I remember that I told you guys that we have a not so needed like upside resistance on this. If we can find out the correlation, if we can find out macro resistances together, well, I guess I would have to say that it would be roughly around here. This is your top side of the triangle. Now I'm going to go ahead and draw your square, or draw the rectangle here, sorry. Just like this. Perfect. Let's get rid of these obnoxious lines here, right? Okay. Now you can see, right, that your triangle is in fact ending at this. This is your apex here. So we're going to change this to this point, which means that we can also change this here, and we can also change this here. This is what your ascending triangle looks like now. Okay, that's great. We're about to start a new bi-monthly candle. Bless you, buddy. This is going to, in 2 days and 21 hours, we're going to start the new iteration of a bi-monthly. That would be right about here. Okay, now I want you to observe something else. take a look at this as in this potential future type of bounce. This, and with the upside that we're getting, could it be that we could resist somewhere at 273 to 359 to then pull back, validate these areas as support, including this, thus creating wicks like this, which would make our inverse head and shoulders, right? And that would give us the exit strategy out of this formation here. Let's just suppose that that would be the situation here. So we're going to just do this here. Let's go ahead and draw the implied direction. Upside continuation. Resists at the areas of 180 to 220, right? Pull back and validate this massive gap at around 177, right? We'll validate that. Bounce to the upside. Continue into resistances right about this point here at 271. 271 resists. Touch at this regression here, because that's really what we've been trying to break out of, right? So we come back to this regression at this point, bounce to the upside, get this massively confluent area of resistance between this and this. Let's suppose that we get the very top side. Okay? That's where we resist. We come back down, right? And start supporting this area again, this gap here, potentially these lows. So let's say that were the question here. In that effort, we would validate those supports at the bottom side, create a gigantic bear trap, because this is the pocket where we bounce hard, right? This would bounce towards the upside, resist at this point here, which is remember guys, your 520 that we were just talking about a little earlier ago. Validate your new area of breakout, which is this point. And this would take us straight to the upside into these take profit targets, which would be 714. Validate this area down here first, double bottom that, and expect resistances here before we can consolidate for a little bit. As we consolidate here, then your breakouts may start happening after a false drop and then an upside. So let's think of this. If we are expecting a move that could be really this big, what would be needed? Well, we would need some type of catalyst, number one, right? We would need a catalyst to really support something this large, I guess, right? So if we have something this large, then great. I love it. What I'm going to do now is try to validate through the means of volatility if this can be possible. Now, remember the exit strategy. This would be your left shoulder, head, right hand shoulder with the wick that are these wicks to create your inverse head and shoulders formation. So now we know that we have regression. Okay, let's measure it. Suppose that we did perform something as crazy as that. So that means that we would connect your right hand shoulder in two different ways. In fact, I think this would be the way here for your inverse head and shoulders. Just like this. So inverse head and shoulders, we find the neckline, we find the lowest part of the head, which could be this point right about down here. We put this into the middle area of your right hand shoulder, it could be somewhere here. And we're looking for a target that is very much what we're talking about here. This would be around 1214, but there is a massive amount of resistance at an average of what I believe to be $8.13 within the next couple of months. And that is so far what I'm seeing here for the FNGR asset over the span of maybe 2 months-ish. So what is it? Anywhere between 6 to 10 weeks maybe? Price action here, should there be some kind of a announcement or catalyst or whatever that is, sure. We could see something like this. But remember that I needed to be supported. I really needed to be supported by some type of catalyst. That's the whole thing here. If it doesn't happen with a fundamental catalyst, this likely will not happen. Okay. So, with that said, what do you guys think? What actually tell me in the chat what would push FNGR for this kind of guys? You know what? I actually do have something for you. Oh my goodness, I really do. Okay, let's look at this. We're gonna go ahead and group this as your ascending triangle thesis. Right, we're gonna just group that into this area, so we can do this to it. Okay, now here's another thing. Many people don't know this, and it happens. It happens, guys. This is really important for you to know. At the year end, this year, we're not only closing the candle of 1 year. We're closing the bi-yearly candle. We're also closing the 4-year candle, and we're also closing the 8-year candle. 8 years. Okay, so if we know the statistics, we talked about it here. We said specifically that when we close a candle, right, there is typically a 60 to 70% chance of retracing the 30 to 50% of the prior bar, but we're closing it. It's still like 2 months away, right? So that means that we are currently decompressing the downside of one of those, upside, to the 50%, at least to the 50% of that valuation. Which one is it? Let's look. This is where things turn. I'm going to give you also the probability of an upside based on the breakout of this thing. So if we break out, if we break out somewhere, let's see, over the next 2 months, this is price action for 2 months. So I'm thinking that, imagine that we started breaking out like early January, late December, early January, right? The latest could be like just around February. So if that could be the area for us to observe like a huge upside, let's just say that we broke out from there. This would be right around the center of your triangle. That's your 50% mark, right? So let's put this line just like this to determine what can be expected here. In fact, we would put it to this line here. I'm gonna split the difference at the top. It's all good. This is your target number 1. Hold on, I'm gonna show you how. Your target number 2 would also be the largest point of the triangle itself. So let's just do it from this point here all the way down to your lowest of the regression, right? Cool. Right there. Cool. Now, if we can, we just apply it here, and this would tell us what that psychological upside would be. If the play is there, the play is there. That's all. I don't care about anything else, right? So this would start to display some ridiculous targets, something like 62.62 to around 158.99, based on this formation theory, right? So if it is that we have that kind of thrust, then there has to be other signs for another gigantic up run. And I think we may have found it, right? And we're going to see the years too, right? Don't fret. I'm going to show you those years as well. I want you to see those years. So let me just go ahead and make sure to add this trend line, everything into the thesis of the triangle, right? There we go. Okay, so there is a present extension happening in just about real time here, guys, and I gotta show it to you. Let me see if I can see it from a 4-month iteration. Okay, here's your second thesis. This right here. Either these two, right? Create your shoulder, head, shoulder. So you have an inverse head and shoulders in a macro scale here, a gigantic one. I mean, huge. It started September of 2020, this is just about a 6-year or a 5.5-year-old forming bullish formation. I mean, huge. And it has a target. So let's go ahead and figure out what that target could be. We do have some pretty, I would say some pretty healthy regression on this as well. I'm going to give you the degen target, and I'm going to give you also, right, the more balanced target for this as well. So we have a shoulder to kind of meet, right? They're gonna differ just a little bit from each other, but it's okay. Okay. All right. And in fact, I think we may have already done it. Yeah, we did. Okay. So yeah, they both meet there. And yeah, the target is really not that big of a difference, but it's okay. I have to acknowledge that no matter what. This would be your first target to that upside, right? We put this to the center of your right-hand shoulder, arguably right about there. And now the second target would be based around this top side. So we also apply this to the center of, we have to apply it just about here, and we'll just go ahead and extend it back. Targets to the upside, $71.26 to $100.12. And bringing in the other strategy, it looks like we have some kind of rhyming on this as far as regression too. So these would be the targets that we're expecting from a formation breakout such as this. We have very similar targets here. So what we would do is just create a whole zone out of this. Eventually, sometime in the future, who knows how long this upside is going to take. But if psychology proves well, then we have an average zone down here. We have a perfectly 50% distributed target there and your top side target. So this to me means that we have a focused area for profit taking, which would be highlighted at this point and also at this point. These would be the zones that I kind of would see as more, I guess, healthy, And this one here would be let's just do that one like some type of orange or something. It's all good. Right? These are what I call your focus. Okay, let's go ahead and just put the receipts on this so that you know what we're talking about. Right? We're going to do the top ones as this here. This is your that's your like least your lesser probability. We're also going to put together the smaller targets based around this tool. 72, 73. And we also have this right over here. There we go. Just about 86.25. And this would be based on two different theses, right? So that's now how we're observing things, right? Hang on, there's one more. That's the thing about this, guys, is that it's not done. There's too much happening here. There's way too much happening here for me to just say that that's it. And there is another technical one. I'm just gonna, oh my goodness. Here, look. Okay, we're gonna do this one as let's just group this all together. This is your thesis number 2. And this is gonna be called macro inverse head and shoulders. Okay, we get this out of the way. Perfect. You see this upside here, right? This massive upside at this point. We get a downside to this point, and then you start this weird thing here. Because we built this upside after a downside, this makes it a reversal formation. Although this has an upside, that's not the point, is that it started building from the low. So this now creates a diamond pennant. So your diamond pennant, I mean, guys, I'm really going to highlight a lot of things here for you. Your diamond pennant would start somewhere along the lines of potentially this trend line here. And this can be used just like this. Let's say that this were your complete regression at this point, right? Okay, so if that's it, let's go ahead and correlate this to the downside regression here, to roughly an area that could be a 50% where we can face the regression bottom to meet its regression that we are talking about as the 12-hour super duper used area that we've always used forever down here, right? So this would then introduce the probabilities of getting our support bottoms around here. Okay, so if that's the case, that looks like a nice regression upside here too, right? So we build this and put ourselves roughly at the price that we're at right now. We correlate our connections just like this, and now we have the diamond pennant. And we are right at the 50% of it, and we are right at the breakout zone for it. When can this break out? Roughly between, if we're looking at 4 months, between January and May. Again, we said maybe ends of January, maybe into February. There it is again. Right? Okay, cool. If this is the case, the target to this is, I don't know what this is. Guys, I'm really jumping into areas where it's just mad speculation. These are sensational targets. Okay? It really isn't okay. All right, so if that's the case, then let's figure that out. This is how you figure out your macro target. You take it like this, and you either put it at the 50% or you put it at the area where you believe to break out from. We still have 2 months to close this 4-month bar, right? So that would put us when? Into January. And then we would get the next candle. That's going to be, you think about it, guys. So, so I'm just going to go ahead and say that we would just do it from here. And this takes you to a gigantic $400 target. I'm not going to support that. I'm not going to tell you nothing, guys. It's just a target that I really don't really believe in, right? Because this thing would need to, I don't know, get bought by Elon Musk or something, but you never know. So yeah, 412 to 630 is what we're observing here based on this distribution. So now this is your diamond pennant formation. I was just going to do it real quick for all of you, right? Just quickly explain it for you. And now we can go ahead and get into the final thesis of this, okay? Let's do it. This would be grouped, and this is your diamond pennant. And it's still on the part of the macro, right? Okay. So we were talking about the years. So now we're going to get into something that would be better used for, this is going to be statistical. Okay. Let's count them. Let's go to the 12-month. This is presently your yearly candle, right? Remember that in average, I'm just going to give it to you right now. 104 days prior to the close of your 1-year candle, you would start to decompress towards the 50% of the bar. Number one, decompression for your year lands at around 240. We were already talking about a 242 to 273-ish, right, in our prior thesis. Great. Let's just put it there as your 1 year. Okay. Now, next, we are closing 2 years as well. But the 2-year also shares this, right? This would just be from this point. So your bi-yearly just shows this range from here to here. So that naturally puts your 50% slightly under it. Let's figure that out. Right about there. And just under that, you're looking at a target of roughly about 207. Let's put that there. Now this bottom one here would also be titled 2-year. Decompression upside. We also have a 4-year candle closing, right? Your 4-year has this high. Let's figure out that 50%. and it has this low. Magically speaking, your 4-year is exactly at your 1-year retracement. So now we just go ahead and get ourselves into this zone here, and we say, and 4-year. Okay, now we also have 8 years closing. That would come back all the way to this point. During these 8 years, we made the gigantic high and gigantic low at this point down here. Sorry, I know you can see it. There we go. This point here. So where's the 50% to this area? It's right where we are right now. So your 1 8-year bar is retracing towards its 50%, and it just arrived today. This means that you have all that. Remember what we were talking about yesterday? I'm sorry, just a bit ago. We were talking about all of that upside from the larger time frame and its statistical reversal. It's coming up. All those time frames, right? All the way, all 8 years long, from a low of 17 cents all the way to the present of 171. But hold on. We decompress downward too. So that means that your, say for example, your 1, 2, 3, and 4-year candle came up all the way to 986 when we had that gigantic upside, right? And at its average for a 4-year retrace, it starts decompressing towards its 50%, which it arrived at just like yesterday or 2 days ago. You see what I'm doing here? And now your 2-year time frame and 1-year time frame are at their retracements now, because those would be lesser time. So now they're retracing upside from the present price to their 208 to 245. That's the question here. What did all that tiny time frame do as we came from the 1-year and 2-year lows from $1 all the way up to where we're going to be at around 240 something? What does that $1.40 do to the more immediate short term? Because all of those immediate short terms are going to start cascading into each other, and they're going to echo into a further upside using physics. You understand what I mean? So if you have, say for example, you're part of the 5-minute people. This was a lecture that I just put out last night. You are part of the 5-minute people, the 5-minute the time frame. You are one person holding a plank, and you are in a still body of water, right? So when you're in this still body of water, you are going to thrust at that water, right? And you're gonna create a ripple as you thrust that one time. So then you thrust it again, right? Hold on, I just froze. Let me start that thing all over. You thrust it again, and then you make another ripple. So, but what if you didn't wait until it was still? What if you rippled again while it was rippling? So you're starting to think to yourself, okay, we can use a bit of thrust here and also increase the frequency of momentum so that we hit it more often. And that is going to give us distance. So if we can figure that out, what would it be? So it's me right now. I'm gonna hit the thrust once. I'm not gonna wait until it dies. I'm gonna just hit it again while that thing is going. So then it's gonna be maybe twice the speed, maybe around twice the speed, or just a little bit less. You're estimating things here. Okay, cool. So what if you did it 3 times within that phase that you are not waiting for it to stay still? So now you hit it 1, 2, and 3 instead of just that 1, and instead of just a 2 in between that phase to wait for it to just die out. You see what I'm doing? And then what if you think to yourself, okay, I'm going to go ahead and thrust it 6 times within that phase. So you're a 5-minute phase, and you're hitting it 6 times within 5 minutes. But you have 5 minutes long. So you think to yourself, I'm gonna get all of my friends. I'm gonna start talking about this to all of my friends. Hey, if we start making enough noise here during our 5-minute phase, maybe we can get the 15 minutes to hear this and they can start doing the same thing too. So they start thrusting all the 5-minute people start hitting and thrusting the water with their planks together. So now it's creating a very large, in comparison, right? And compared to the 5-minute people, they're hitting a larger wave. So that ripple goes further and further and eventually does reach the 15-minute. So now the 15-minute people also follow that same strategy. So the 15-minute time frame people are now thrusting and thrusting so that can ripple 2 times as hard to the 30-minute people, which are then going to thrust into the hourly. So now while the 30-minute people and the hourly are starting to ripple their own planks into that still body of water, then you're going to get your 4-hour people. Now, how long does it take for a day to close? Because those 4-hour people can reach the 6-hour people right away. Your daily time frame, when you trade a single day of trading, your single day of trading is just 6.5 hours long. That's your intraday session. That's all there is. Of course, you have your pre-market, and of course, you have your post-market. Of course, you have Asian hours, Euro Open, all that stuff, all good. But as you reach that 6-hour time frame, now you're touching on the day thesis. So now the 6-hour people are reaching your daily people. So then the daily people are thrusting hard enough to reach all the way to your 3-day, your multiple of 3, right? 6, right? So then you would ripple the 6-hour people into your week and bi-week. And now we're talking about months. So do you see how it starts? Let me get an A in the chat if you're understanding what I'm talking about regarding momentum against thrust. Please, and distance here. Please throw an A in the chat right now, guys. I want to know that you're awake and with me and understanding what we're saying here. Throw those A's in the chat right away, guys. I want to know that you are here with me alive. Very cool, guys. Very, very cool. I love that you guys are still here with me. I love that you're still alive. We're still doing it here together. Have I ever done this for XRP? Guys, would you like to answer that? Have I ever done analysis for XRP like that? Go ahead, guys. Answer it for me. Oh yeah. Very much so, brother. In fact, that's I think that's probably the only video I release. I think it's really just XRP that I release on a daily. You know what I mean? Oh yeah. Okay. I love that you guys are following me with this. So now that we know that we're decompressing and we're increasing some of that momentum towards that upside, the final stage to this thesis would be to look at your volatility in linear. This is where things start to flip, okay? And by the way, team, just real quick here, right? I can just go ahead and show you on this screen right over here. All right, guys, this is me displaying to you what I typically put out. Right? So this is your XRP video, XRP, right? FNGR, NRGV, XRP. So I usually do like, XRP, right? It's just because it has a lot of people in the community, just like FNGR did at one point. And I kind of wanted to just like I did, right? Remember, guys, what I did for FNGR, what I did for GTII, even GME, I just wanted to help, right? Because I have a really non-biased opinion, guys, and a no bullshit policy. You know what I mean? So let's just recognize that that's what it is. So if I can express non-bias to you, then now I know that then you guys will know, right, that you can at least be able to somewhat take into consideration with a grain of salt the targeting and the directional bias that I'm presently observing. Right? I'm not paid by FNGR. A lot of people think that I am partnered with Ham, the short killer, guys. I'm not partnered with him. You know, he's done his thing for a long time. I'm just doing my thing with myself. You know, I'm not affiliated with anyone. You know what I mean? So just in case there's any doubt or any whatever, I'm not here to pump anything, guys. I do. That doesn't make any sense, right? It's just that's not the way I do things, guys. I want to make sure that I can give you the opportunity to observe price action the way I do and see the probabilities through mathematics and through psychology, right? I don't really care about anything or anyone else in that, guys. And even your positions team. I know it may sound rough. It may sound a little like annoying or whatever, but I don't care about what you're holding. I just want you to know that I'm going to express a non-biased opinion because just like I said in the first times, guys, FNGR brought me thousands of people because I was often right. I'm not right all the time, and I'll try to be right as much as I can, guys, but I wasn't always, but I was right enough to have a lot of people follow me, right? I loved it. And I thank all of you for that. But it's also because guys, if you know my story, you know my story. My son at 2 years old was dying, and I set out to be what I told him. I told him in bed that I was going to be the best trader anyone has ever seen. It's terrible to say that. It's vanity through the roof. But I told him because I'm his Superman. He was 2 years old. So if he is relying on dad to do exactly what he said, then dad has to be an honest person. Then dad has to be transparent, and he has to be a good example for him to grow into a great person too. I have that guy right behind me every single day, and even right now. I am not here to lie. I'm not here to bump up a stock. I'm not here to lie to you. Guys, I'm not here for any of that. I just don't want anyone else to experience what I had to experience with my little boy. And I felt for families, and I have received emails from people saying that I won't commit suicide anymore, Arca. I was this close to killing myself, and I thank you. Guys, receiving emails like that fucking hurts. You understand? It hurts really bad. Because if I wasn't there, if I didn't say anything, would they really have taken their lives? You know, they have parents. What if they had kids? What if they were married? You know what I mean? Everyone has some form of family out there, you know? I don't want that to happen. My reason for being here is a lot deeper than what you guys think. I stepped away from FNGR, guys, because of all of the threats and all of the crap that was coming in. Because I'm a short bias trader. I prefer the short bias, the downside, than anything else. So what I do here is that if I play it with you, I'm playing it long. And if I am able to be short bias, then I'm going to display to you exactly what the shorts are seeing in their end. Because I play that. And I not only play that, I systemize that, building algorithmic systems, high frequency trading systems. I've already been offered 3 institutional positions for this. and one risk management one. So you're not talking to a regular trader. You're not listening to a normal person here. You are potentially listening to one of them in the outside without a contract. That's who I am. So you can think of me as a Robin Hood. You can think of me of whatever you want, but know my story and understand why I'm here. My purpose is simply to exploit the strategies that are against you. That's all I care about. I don't care about your position. I don't care about who's in it and who's not. I care about the strategy and the process and how it's done and delivering the message, and that's it. Just the way that I did from day one of covering FNGR. I love you guys very much. I promise everything I say is absolutely the truth, guys. So do me a favor, team. Do me a favor one more time. Throw all those A's in the chat so we can get a huge round of applause here for Arca Bulls as we're getting more and more exposure here, guys. Hit that like button. Throw those A's in the chat right now. Let me see you guys come in. Come in. Throw it, guys. Throw it. Let's kill it, team. Thank you so much, everybody, for participating. Really love you all. Thank you so much, guys. You mean the world to me. Let's see what's up. Let's get it here, guys. What else do we have present? We talked about these massive upside, guys. All I'm going to do here is just express to you. I want to look at CRTD real quick, right? But I want to just show you here what these signals are showing as far as volatility is concerned. Man. This is not bad. This is not bad at all, guys. Wow. Post hours, 170. Man, let's go. Okay. Take a look at that, man. Mama, you're showing yourself. Okay. So let's get this thing. Let's get this thing going. Bull flag in the immediate short-term time frame, very good. Look at your momentum. I know, I saw. See this upside? This, and see this here. Linear volatility. Right? I'm just going to go ahead and quickly explain it to you, just so you know what I'm looking at. Volatility is the dispersion of returns. So this will show you the frequency of buyers and sellers within a certain time period. So this is your 30-minute time frame that we're observing, and in the 30-minute time frame, we are currently coming from critical contraction, no acceleration, right? No, like a car, right? You accelerate and you go hard. So in the 30-minute time frame, we're accelerating hard. These little light bulbs, or the histogram, this is your volatility component, stepping up. Your moving average is showing you the bias of continuation. This is not direction. The direction is put to you by momentum. So I'm using something like stochastics. You can use a stochastic RSI. You can use moving averages, whatever you want, right? Maybe it's one big cup and handle. It could also be like an inverse head and shoulders. It could be a bull flag. It could be anything, right? Just use your imagination and it's probably there. As long as you don't force the formation. Never force it. Okay. So if we're looking at stochastics, right, or your momentum bias, it's telling you upside here, right? And we're gassing it. We're accelerating in the car. Well, it looks like we're accelerating towards an upside, right? Good job. Our job here is to see how much of this upside bias we have into the future. So from this 170 closing, or we're going to close, yeah, did we just close? Yeah. So if we have further upside, let's see how much upside we have left. Hourly time frame, check it out. Upside bias, it looks like we're fully, almost floored. Everybody's talking about that. I know, I'm going to look at it tonight. Nokia and BlackBerry, everybody, Nokia and BlackBerry. Okay, by hourly time frame, look at the upside. Look at the massive acceleration rate here. Oh my goodness. The reason why I'm climbing here, guys, into this is because this can highlight how much by a dollar value we can move up, right? So if we have your 2 hour time, I mean, this is not where it stops. Where does it stop? It stops when we first find the momentum here from stochastics pivoted downside. They both have to be perfectly down. And that's going to give us the last upside average true range. The average true range just means how much a candle can move up or down from the opening of that candle. So your 2 hour time frame, right? It opened up at 169 and closed at 170. So if we see the statistics on this, let's go ahead and pull up data cells here. Right, these are one of my algorithms, guys, that I put together for, it's for the team when you join Discord, but like it really is it was a personal thing to me. I need like live data. So your current average true range is about 5 cents. Technically speaking, this has a 165 bottom from the opening. Suppose we open at 170 into the next day. It's probably not going to happen. I don't know, because we still have pre-market as well. So if we can open at 170, that means that statistically speaking, you could move down to an area of 165. But this support has a lot to do with this candle here and this candle here. So I'm going to bet that it would be still 165. Yeah. So 165 bottom on this, and also to the upside 175, which stops you roughly here at 174-ish. But if you look at these top sides right about here at this gap, that takes you to 175. Okay, so that now is starting to tell you that we could be observing a possible breakout. Okay, because the 2 hour time frame is still pivoted up, but remember, this is not done. I'm just showing you how every time frame has its own average true range from the opening, right? Now you know. Every candle that opens has its true range, up or down, and that tells you here, current average true range, 5 cents for 2 hours. Let's go now to 3 hours. Okay, your 3 hour time frame massively pivoted up and barely starting to accelerate. This is amazing. The current average true range is 5 cents on this as well. Let's keep on going. 4 hour time frame, guys, acceleration, very, very nice. Massive upside biases inside of the bullish control zone, good. That gives you 7 cents of upside. We are looking for the 2 moving averages here in stochastics to be pivoted to the downside. They have to be perfectly down, okay? 6 hours, massive upside, crossover. We're accelerating to the upside in 6 hours. That's giving you 8 cents up. 8 hour time frame. I'm going to speed this up now, okay? That's giving you about 10 cents to the upside. We're accelerating into the 12, upside bias, 10 cents up. Daily time frame, does it have a downside posturing? Does it? This creates a problem. This kink on the yellow one, because it's kind of V-shaped. It's not good. That's still upside, and it closed massively green. So 2-day time frame. We also closed this today, and it looks like it's turning. So this is still upside. 3-day time frame, still upside, accelerating from critical contraction. 4 days, kinked. It's still upside, closing. We're about to close this actually, and it's still green. 5-day time frame, still kinked. That is not a perfect downside posturing, which is why we just opened the new 5-day and now it's upside, because it's not right. Weekly time frame, there it is. We are to expect a continuation to the upside based on a weekly average true range. That puts us at 38 cents to the upside from the opening of the week, which is at 156. 156. The current ATR top is telling you that we would face an area of 194. Where is 194? That would be just about this point. Just about this point here. That's your 194 target. There is a massive gap in here. So I would really be biased towards anywhere between I would say 183, 194, and about 207. The 207, it meets your gap right there. Let's just say 202. And also your 2-year. You hear that, guys? We're now experiencing that, what I told you in the yearly retraces. Statistics are now telling you that we're going up towards the 2-year retrace within a few cents. You see what I'm doing? Now it's not about psychology. Now it's not about the supposed statistic just based on the closing or decompression time on average of your macro years. Now it's not about the inverse head and shoulders or the cup and handle or the fractal here that leads you to a gigantic upside. It's not about that anymore. It's about simple math. So now mathematics are telling you that you're going up towards those targets. Interesting. Okay. So weekly time frame, that's where your downside starts. So that would technically be from an area of around 208 or 207, your weekly drops from there. Let's see. Bi-weekly time frame, oh, barely supporting that. Hold on. There will be some more downside here. Downside into the monthly, bi-monthly, and you would get a total of 3 months down. So there is a probability here that your 3-month time frame may or may not drop should there be some disturbance, $2.85. But that doesn't mean that it will exactly to the dollar, because your current ATR low is minus $1.26. That doesn't exist. So if it does that, guys, we would just have to see it already tried it. It went down. And we ended up at that regression that we talked about. So that's your downside. Your 3-month time frame is now part of the regression or the retracement of your bi-yearly. Right, guys? Scott, man, thank you so much, buddy. I really appreciate that. Thank you, dude. He is saying thank you for all your help, brother. It's been a long ride on FNGR. Your insight means everything. I love you, buddy. Thank you so much, dude. That's really kind of you, dude. Thank you, buddy. Thank you, buddy. Guys, statistics is leading towards an upside everywhere, and it's already done on the 3 months. So that means 3 months continues towards what? Look at this. Upside, right? Look at this. We're accelerating. Oh my goodness. And here is a very strange thing. Both from volatility and your momentum. We are sitting on a quarterly chart here. Notice that we've never, ever, historically speaking on FNGR, we've never been this low on volatility ever. This is retracing from a historic low and creating an upside. So when we ran to a $9 valuation or whatever that was, all the way to freaking $17, this was where we were on volatility. Right here. We started accelerating towards the upside and eventually got to this area of volatility. We are now starting to expand from all the way down here. You see what I'm saying? This, guys, and paired with this, your quarterly momentum is also at a historic low and reversing. Check that out right there. This is where we are. This was your lowest iteration. Guys, this is a big, big, big deal. Oh my goodness. I can't believe guys, I didn't notice that. I'm just discovering it now. This could lead to something gigantic, guys. Okay, so I'm just If we're starting the upside, right, we already got that. Your 3-month time frame is leading to $2.85 upside. That would put you at a current ATR top of $4.44. The hard target on the 444 is 408. Since it's still upside, let's go. 5-month time frame, or let's go to your 4-month actually. Let's see what it does there. It's still pivoted towards the upside. Your 4-month time frame, 345, takes you to 494. Interesting. Hard target would be just about 509. The center would be right at that target, roughly about your 468, right? And then we get into your 5-month time frame, and I think that's the final one. It's kinked, still upside. It's still upside. And we're 2 days and 21 hours to close this. But man, it's about to retrace. Guys, oh my goodness. 50% of the 5-month is 215. And it's been retracing from 136. It's at 170 now. Oh my goodness. Okay. I would say it's from here, guys. $3.80 from the opening. I guess, should we reach the target? Yep. I mean, oh my goodness. Guys, if we reach the target of at least 190, we're reaching 3. Yeah. So that would be 2, 3, 4, 5, 6. Yeah, guys, six, between $6 and $8, somewhere around there. That's what I'm catching. And again, massive historic crossover here on volatility. Dude. I can't believe what I'm seeing. Oh man, even this, guys. There's something going on here, guys. Something gigantic is happening. And oh my goodness, here it goes, guys. Here it goes. Just to top it off for all of you, just to top it off for you, check this out. Check this out. Oh, dude, let's go. Okay. The last time we jumped, right, to 529 or 530, whatever that was, remember, it was the iteration that we're talking about right now, right, where we have this critical support that we're bouncing from, right? Okay. Look at where we crossed into in order for us to get that gigantic upside. We had to go into the critical zones of volatility here. We bottomed at that right there. Oh my goodness, hold on. This is where we bottomed out. Let me show you. Right here. And then we started getting this turn, which then got us from the target. Yeah, from the lows of just about 123 to 530. And if we look at volatility one more time, oh man, oh man. And we put a trend line across this area. We are just about there right now. Turning. Look at that. And where is it on the fractal? So if we're right here, right, and we put one of these lines there too, right? Let's get this down. We are potentially, guys, remember that this upside just happened today. It did the upside in 20 days? Dude, this may be right here, guys. We may be right at this point here. I'm not going to say this with true conviction because I don't know. But guys, if I'm right, and I don't freaking know, but these candles may be related, and this maybe gaps up tomorrow into this iteration. Statistically speaking. What? Oh my goodness. Guys, I think it's this one. Let me see. What does that even measure? So if, the opening to the closing valuation of this was just about 9.59%. And this one here, no way. 9.59% closing. Get the hell out of here. No way. It looks like SMCI. Wow. Guys, we are really silly right now. I think that's it. That may be it. Crazy how the 5-day time frame is leading the daily. Really interesting. Guys, I think that was maybe the bottom. That was probably the bottom. And look what's happening right now in price. Look what's happening. Check it out. This is your daily close right here, and we're gapping up right now. 3 cents gapped up so far. Oh my goodness. Something is up here, guys. Something is up. I don't know if it's going to do it tomorrow or the next couple of days, but it's probable. Dude! Something could be up here. I don't know. So now, now you know. Now you know, guys. That's where we're at. So let's see how it goes, guys. Let's see how it happens. This is so cool. I hope it works out. But team, this is looking okay. All right, guys, let's I'm gonna go ahead and just crap myself here a little more, and and I want to take a look at, of course, right? I wanted to share this with you guys. I wanted to share the ticker for CRTD. Let's find out what it is, guys, what it's doing, because it may be correlated in some way. What time is it? Okay, perfect. Oh, man, guys, that's amazing. That's just freaking incredible. Daryl, brother. Okay, so if we're looking at the behavior of CRTD daily time frame, even in the weekly, really, this has actually, oh my goodness, yeah, this has actually come down to its major liquidity zone. This is your massive, massive demand on this ticker here. Should it face? Yeah, I mean, this was just a liquidity grab, right? Liquidity grab with an upside here. We're currently at this resistance. What's volatility? Oh my goodness. Your 1 week is upside with expansion. What? Hold on. What? No way. This is actually a minimum requirement for me to observe or for me to consider upside continuation. The upside bias on your 4-hour time frame against your 4-hour volatility with acceleration and the bias, right? So guys, this is really upside. And it respected regression. What the heck? This has already it's been happening. Okay, there is a bullish divergence on this as well. Let me start it from here. 4-hour time frame upside with massive acceleration continues. Let's get the data cells in here. Whoa. 3 cents up on this. That means that you're probably going to be at, if you're going to be at around 32 cents on this, then what is it? It's your local top. It's all this resistance here. Just about 3106. Okay, it's moving up towards 3106, but that's not it. It's actually just your pullback zone. What? Guys, hold on. This is really illiquid and really dangerous, but this is showing signs of life and signs of life and inverse head and shoulders here, 6-hour with upside biases, 8-hour time frame, huge acceleration, upside momentum. What? 12-hour upside with acceleration. Your daily time frame completely gapped up, and now volatility and momentum haven't even seen the efforts of this, and it's still upside and accelerating. What is going on with this stock? Guys, we're about to break the signal for this is a statistical signal here. We're about to break outside of the 15th percentile from all of this contraction with an upside bias. We just closed that 2-day. Likely the signal fires the next session. 3-day time frame Although it is contracting, it does have an upside here, and it's way above the prior red bar's close. That's going to shift as well. 4-day time frame still showing acceleration and upside. What is going on? Guys, your 5-day time frame just closed with a huge signal fire. This is, guys, I would be back testing this right now. This is, the break of the 15% upside. And just massive conviction, huge bullish engulfing. What the heck? Weekly time frame expansion with upside bias. We're expanding on a bi-weekly. Upside into the monthly expansion starting the show. We're fully accelerated and at a historic low. And I'm just going to consider this to be it. Your bi-monthly time frame probably closes at around 33 cents, maybe 31 cents. This gives you, I don't know what that is, but it's not right. Oh man, hold on. Yeah, I'm gonna have to come down to like a 4-day average. It's also closing in 1 day, 20 hours. Guys, I think this is going for 130. 120. Oh my goodness, it is your top side. It's literally this thing here, whatever that is, 117, just about. It's. I would say that the range for this, guys, oh my goodness, what is happening? Are they about to announce something or what? I don't even know what's going on with this, man, but I remember the one person that was really into this was Avid Trader. He was really into this stock at one point. This is where I think it's going. Top resistance 76.48 80 to 85.35, followed by 99.52 into 117. I don't even know if Z-Squeeze is already identifying the momentum. Let me see. Let me get rid of data cells. And let me load Z. It doesn't even hold on, let me go down. Yeah, it's literally not reading it. I need this to be, yeah, buddy? Huh? Oh, there it is. I don't know why it wasn't working. It said that this ticker wasn't existing. Did you just see that? You guys saw that, right? It literally said that this ticker does not exist. What? Did he double X? Oh my goodness. Well, he's gonna love this video. Yeah, it's not reading it yet. We're not reading. I need more data here for Z-Squeeze to notice it. I mean, I could be more sensitive on the data, but guys, this is pretty ready. I don't know, guys, this is really illiquid and makes it dangerous, but it's ready. I really don't know what else to say other than it's got a right angle triangle here and the inverse head and shoulders. This is a buy strategy and it's getting ready to break. You want to see something sick? Let's just just to play around. Inverse head and shoulders, take profit. Center of the shoulder, sorry. It would be right about here. Check that out. 99.52 is your inverse. That is your psychological target and statistical rhyme. My goodness. Okay. That's interesting, Nis. Thank you for those notes. We got to take a look at that. Guys, there's something going on with this CRTD, and I don't even know if it's going to be the next one in play, whatever, but it's there. Let's see. All right, team. So oh my goodness, I think I now have to, oh God. I have to make a video on this now, I think. This has a broadening wedge. Oh my goodness. It would be something like this here. No, it's a right angled. I got some studying to do here, guys. I think I'm seeing a whole bunch of things here. And I'm gonna study it some more. There's something critical going on with this. We'll see what's up. But yeah. Anyway, guys, please remember, sign up for the master's course, right? It's in the link in the description below. It's $100 for a 9-week mentorship. Live with me, of course. And yeah. But I appreciate everybody for coming on out. And should there be any questions, remember to reach out to me at arcabulls@gmail.com, guys. Join the Arca Bulls team. Let's trade together. I love you guys so much. I wish you all a very good night. Rest well. And we will speak very, very, very scary Larry later. Gar, love you, buddy. See you, KD. Thank you guys for coming on out. Daryl, love you, buddy. Niz, Abe, you take care, buddy. D, take care, bud. John Rambo, XRP, love you so much, buddy. Elegantly, I'm going to catch you guys later, all right? See you, Vince. Love you guys so much. I'm going to take a look at that right now, Jen. All right, guys. Later, everyone. We'll talk soon. Thank you, team. Thank you, Scott. Love you, buddy.